Just like to share with you a very simple client engagement strategy that we've worked on with a number of advisors in the past, and I think could be quite valuable right now. It's called the Personal Financial Audit, and it's based on the premise that in order to determine whether a service that you deliver is going to be valued by your client, and it's something that your client will pay for, I think you need to apply what we like to call the 3 C's test. That is, the service that you're delivering ought to be about something that is relatively complex, the first C, where the consequences of getting it wrong are pretty significant and detrimental. That's the second C, the consequences. And the third C is that the client can't self-serve the answer. They can't get the answer themselves. It's not something that can be disintermediated. So how does this relate to the personal financial audit? Well, I think you need to consider very carefully that the key in the complex part of that 3 C's is that it should be seen as complex to the client. The consequences to the client of getting it wrong should be detrimental. So something that may be quite simple to you may be quite complex to the client. And this brings us to the personal financial audit. Personal financial audit is nothing more than a 6-question strategy to determine whether your client could do better in relation to tax planning. Now, from your standpoint, it's very, very, very simple, but from the client's standpoint, and retirement planning is seen as complex. So it works quite well. It should be relatively easy for you to execute, but seen as difficult and therefore. So what is the personal financial audit? Effectively, a tax health check. Individuals are not missing, the individuals you're talking to are not missing low-hanging fruit that could significantly improve their financial well-being. And any time of the year is a good time to do this, really. So you'll be looking at making sure they have been using fully their personal allowances, and if they're a couple, that both of them are doing it. If they have children, that they're maximising the uses of their children's allowance, their CGT allowance, even their personal allowance, perhaps funding for a deposit on a first home or the cost of higher education. So making sure that they're using their CGT exemption, the individual that you're talking to, that is, making sure that inheritance tax exemptions are being used, and also, of course, these days very relevant, making sure that they're contributing as much as they can and is appropriate for them to registered pension schemes, and also thinking very carefully about how they draw their benefits down from those schemes, especially since we have those significant changes coming from April 2015. So the personal financial audit is nothing more than a check on the fact that the individuals are using fully their allowances and exemptions. Let's not also forget that when it gets towards the end of the year that they're maximising use of their ISA allowance, NISA, to £15,000 from July. So I would encourage you to think about the name that you give to that campaign. And in the past, when we've used this campaign with advisors, the success that advisors have had with its use has been attributed largely to the name, according to them. The fact that the campaign that they were delivering, and let's face it, based on relatively simple principles, had a strong identity, and an identity that was associated with professionalism. That's something to do with the use of the word audit. So I would encourage you to have a look at that, have a look at the TechLink bulletins on the subject, and consider the use of a personal financial audit to engage with your clients.